real quick, if you haven't heard about the FX Summit 2023 conference in Miami, make sure you guys grab your tickets, fxsummit2023.com. We'll make sure to see you there, June 9th to the 11th. Come learn from some of the best traders, investors, and crypto enthusiasts. We'll see you guys there. All right, ladies and gentlemen, I got a good friend of mine in the house today. Welcome back to another incredible episode of the Expert Trader podcast series. We have Rizs Iqbal, aka Words of Wisdom, if you guys have seen him on YouTube. Rizz, thanks for stopping by the show.
My pleasure, man. My pleasure. Thank you for inviting me.
For the folks that may have not come across your page yet, you want to give a quick background on you and a quick rundown on who you are, how you got into trading?
Yeah, for sure. So obviously my name's Rizz. I currently host a podcast, Words of Wisdom. But I got into trading coming into my 7th year now. In probably about a month's time will be my 7th year. So good while ago, before a lot of the sort of social media pickup. Back then there was only really 2 companies I can think of that were sort of around on social media. The good old RIP to the OGs, Astro and Infinite Prosperity. And I actually did Astro's course back then, to be fair to you. That was how I started. That's how I got into trading Forex. So, at the end of the day, if they weren't around, I might not have ever got into it. I might not have actually learned. So that's how I got into it. That's how I learned trading. Obviously got into the basics, went through the usual journey, as you can imagine, of thinking I'll be rich within a year. I thought a year was a good sort of a good amount of time. I thought that was actually a good chunk of time. I thought, I don't want to get rich quick, but 1 year should be enough. So very quickly, as I, within the first couple months, I realized, okay, this is a lot more than I imagined, a lot more than I had perceived. Blown a couple, £1,000 account. And then I took a little break of trying to trade and started to learn. Went through the process of actually learning, dedicated only time to learning, not even trying to trade, not even trying to demo trade, just trying to learn the concepts. Then I had another crack at it, thought things would do well. I had a better understanding, but in terms of the psychology, and the actual, respect for trading, the skill set itself, it wasn't there yet. Kept blowing accounts, kept not doing well, have a decent flip here and there, and then just blow it overall in the end anyway. Then I actually got married. And then when I got married, I ended up saving a nice amount of money, putting that into trading. Had a good run for a good few months. But again, just that same level of sort of greed. It was like I say a good run, it was like up and down. It was like going up, I would draw maybe 1,000, it would come back down, maybe put that 1,000 back in, go up, withdraw 2,000, come back down, put 1,000 back in, just like a cycle like that for a good few months. Ended up blowing that account. And then that's when an opportunity came up to go work at Astro, which at the time, obviously in my head was like, oh, this must be the place to be. This must be the place to go and, be around traders and the top of the industry. I learned from these guys. I look up to these guys. And I just had a kid at the time. And I originally had turned down the offer to work there because I just had a kid and I lived in a different city, like 3 hours away. So I thought, it's not going to happen. But I don't want to live with regrets. And because I thought, this is such a good opportunity and I want to be a trader, this is the best place for me. So I went there thinking, okay, this is going to help my trading. Unfortunately, when I got there, it wasn't really what it seemed, and it wasn't really focused around trading, as many people obviously will know. But luckily, I came across a mentor when I was there. And the benefit of me being there was that obviously I was around trading. I could have charts up and it wouldn't be questioned. I could, be in a Zoom call or be learning basically without being questioned too much, obviously, because it is a trading environment in that sense. It wouldn't be like
ideal work environment versus like the people that have to hide from their boss whenever they walk behind them. Yep.
Exactly. Yeah. So I didn't have to worry about that. So I luckily came across someone called Rizs, who runs a small community called Currency Lab. Fantastic guy. Was a bit reluctant to take me on at first, as you can imagine, because I was working at Astro, because he had a few questions about that. But thankfully, I convinced him to let me join his group. And, that's where I first started to find consistency. Originally, he was teaching a swing trading strategy, on GBP NZD and GBP JPY, I believe. Yeah, GBP JPY. So, that's where I sort of first found consistency using Fibonacci's, institutional levels, and structure. So focused on that originally. And then during COVID times, when we were on lockdown here in the UK, I was actually at my in-laws' house. And that was when I was really getting to go into the live calls that Rick would host. And that's when he started to slowly bring in sort of smart money, like order blocks and liquidity. And that's where my trading really started to excel a lot more, because I put more focus onto sort of risk to reward. I didn't really have a focus on risk to reward as much before, and put more focus onto the why behind price. And it was very beneficial for me. Still had a lot of learning curves, of course. I had a sort of my first ever try at FTMO. And I remember I had a 100K account. First ever try, passed the verification, did 60 something percent on the first ever one, which was amazing. It felt incredible and it was amazing. But then it kind of set me up for failure for a bit, because then I this crazy expectation of what was possible with this, easy money, and, easy. If I'd done 60% this month, I'll do 70% next month. And as you can imagine, the next month I did like 2%, 1.5%. And then the next month after that blew it. And then I had to go through a little period of kind of settling that mindset, getting over this, mindset of thinking it's easy and that you can just pass these challenges. And then that's when I came up with a system for myself, which was just sticking to a 1 to 5, risk to reward, which is still quite high, to be fair. But because at the time I'd seen consistency in that, I nearly said to myself, well, let me do 1 to 10. But then I asked myself, like, how often do you see 1 to 10? Not very often. How often do you see 1 to 5? More often. I was like, okay, so let's go with 1 to 5. It doesn't mean at one point I was going through a period of just sticking to that. Nowadays I'm a bit more fluid. I'll aim for that. But if, let's say, the market in terms of like a target makes sense to take a 1 to 4, I'll take a 1 to 4, 1 to 3, 1 to, no problem. That's as far as I'll go there. I won't go below 1 to 3. For me, that's sort of my appetite,
Now, real quick,
that's what makes,
because there's a lot of things for us to cover, but just real quick on that topic, do you feel like it's because of your experience that you're able to use your discretion to figure out when to pull early and when not to pull early? And do you feel like that intuition's improved over time?
I think so. I think originally I had to stick to quite a very solid and regimental sort of viewpoint, as in like target 1 to 5, have to stick to that. And as you build that experience and you be in the markets long enough, trying to stick to that rule and sticking to that rule, you'll start to realize that in certain conditions, maybe it's a particular pullback trade, right? And then you realize, okay, this isn't as high probable to hit a 1 to 5, but it gives me a 1 to 3 plus. So therefore, I'll make sure I take a partial or at least or close the trade, at this particular, say, liquidity point or structural point. And therefore, like over building experience and over time, you start to be able to trust those decisions a lot more.
For sure. Now, as traders, we mature over time. And so what I've seen and what I've just heard is basically like a story of maturity and emotional maturity on the charts. Do you notice that there's still some issues that are still pervasive? Like they still come up every once in a while. And are they the same issues as before, or are they new problems that you deal with as a trader?
There are still issues that come up. I think a lot more nowadays, it's more like things that happen, not just outside of trading, but just when you're in a heightened state. So I feel like if you try and trade when you don't have clarity, then you'll just naturally probably get a trade against the trend, against, what the market's looking to do, because you don't have that clarity anyway. So you're kind of forcing a trade. So that can happen from time to time. Less so nowadays, because I'm just a bit more aware of, hey, if I'm not clear, I don't want to trade. It was literally not last week, the week before, I'd taken 2 weeks off because I wasn't clear on a higher time frame narrative. So I just said to myself, I'm not going to trade. I'd rather not risk. And I'd rather wait until there's clarity. And then last week I had 3 trades and they all hit TP, right? No doubt. And that's not how every week's going to be, but that was just because I waited and I was clear and I felt confident, and, a clean setup that fit my entry trail presented itself. But sometimes there'll be times, there was literally one about a month ago where, I hadn't slept very well. I had like a little argument with my partner. So I was already a bit heightened when I woke up that day. So in my head, I said to myself, I'm not going to trade, right? I'm not going to trade. So I should have listened to that first of all, but then I did take a trade. Okay. The trade fit the plan. I executed on it anyway. Then I said to myself, don't look at your phone when you go to the gym. Okay. Go to the gym. Just don't look at your phone. Just leave the trade to play out. What did I do? I was already heightened, looked at the phone at the gym when you were distracted anyway, right? And you're in like a chaotic situation for your mind anyway, because you're working out. And I'm looking at and I'm second guessing myself now. I'm like, oh, this could actually go the opposite. I was in a short, but I was like, this could go long. Okay, let me get out my short. Let me get into a long. Long takes a stop loss, right? And then I was reflecting on it. I was like, look, you already were heightened. So these are the sort of things that come up nowadays where you have to just try to be more self-aware anyway. So you're trying to control yourself when you're in those heightened situations. And I call it like the domino effect, where if one thing happens, normally it will knock on, and then eventually it will go into your trading. Or vice versa, something happens in your trading, and that will knock on, and you'll do something outside of trading.
We were just having a
Those sort of
conversation
things.
about that yesterday. It's that mistakes in trading love company. You typically don't just make
Yeah.
one of the mistakes. You'll make a few in a row. So that's really excellent. And I love the way that you broke it down between the problems that plague new traders are going to be more technical, or they're going to be more systematic, 1 to 5s, figuring out your ratio, figuring out confirmations. But I think the most interesting thing I just got is that advanced traders deal with like everything that's outside of trading. And I love the phrasing that you said, which is a heightened state. So can you talk about the heightened state and talk about what the optimal trading zone is?
Yeah, for sure. So like trading in general is just like a high performance, like a high performance sport. There's chaos. It's chaotic anyway when you're trying to trade. The best analogy I can give is, because I like combat sports. It's just like boxing. When you're boxing, it's not a case where you just hit the other person and that's it. That's all you have to worry about. You got to worry about your footwork. You got to worry about the person trying to hit you. So your defense, while also thinking about your offense. You got to think about the crowd that is all there as well. You're breathing. So there's all this chaotic, this chaos going on. And our job as a boxer in that case would be to be calm in that chaos. Otherwise, you're not going to perform very well. So when we relate that to the charts, I call it like calm in the chaos, because the charts are chaotic. There's so many time frames. There's fundamentals coming out. There's different sessions, higher volatility, lower volatility. We could be ranging, we could be trending. There's obviously the different time frames, as I've already said. And then as you go lower, you start looking at breaks of structure, and it's very chaotic. And it's our job to be calm in that chaos. And therefore, in terms of like heightened state, if you're already coming to the markets, which is already chaotic, with a heightened state, so you're already feeling off, whether it could be something small like you haven't slept properly, could be something small that you haven't eaten properly, could be something like you just had an argument with your friend or a family member. It could be that you just woke up and you're in a bad mood. So if you're already bringing a heightened state, like a negative state almost, to the charts, where you're about to having to be, control and be balanced and calm enough to be able to handle all the chaos, is what I call like a low probable scenario, like a low probable mindset that you bring into the charts. We always talk about low quality setups and high quality setups, but this is what I would describe as like a low quality mindset that you bring into the chart.
Very nice. So the issue that I've seen is that when you're in one of these heightened states, or when you're a little bit off your game, it's harder to have self-control and restraint. And so is there anything that you do to be able to center yourself when you're in these states, to remind yourself, hey, the way to make money is to respect my capital, and when I'm in these heightened states, to stay away? Do you have any sort of reminders that you tell yourself, or any activities?
So I have like 2 or 3 things. One of them is literally just getting used to, and it took a while to be fair, of just not trading, right? There was a huge, trading can be addictive. It's almost like gambling if you're not doing it correctly, of course. So it was like getting over that addiction, right? So like going cold turkey, getting used to just not taking a trade and understanding that there's always going to be move in the markets. I feel like we're tricked into believing, not by anyone in particular, but like just the markets themselves and how we perceive them. We're tricked into thinking if we miss a move, oh my God, I can't believe I just missed this 100 pip move or 100-point move. But in reality, it's going to be another one, maybe the next day, the next week, the next month. There's always going to be another move. So just reminding myself of that. Secondly, I do this thing where I actually recorded a video once when I'd done something stupid years ago. I'd like blown an account, and I made a video because I was just so annoyed at myself. And I made a video just, literally just me talking to the camera, to myself, reminding myself of why I'm doing this in the first place, right? I'm not doing this to try and make loads of money or try and flip an account or just try and, have a huge percentage return or be known as the most amazing trader in the world. I'm doing this because I want to, look after my family. I want to have time and place freedom. I want to be able to, change the world in positive manners, such as, charitable work. So I'm not doing this just to, look good or to have this ego trip. So I had to remind myself. And then I reminded myself of all the stupid mistakes that I've continuously done. So like, you keep doing this, Rizz, you keep doing this, and you shouldn't do this, right? So and so I watched that video pretty much every morning to remind myself of, why I'm doing this, the silly little mistakes that I repeatedly have done in the past and try not to do in the future or in the present. And yeah, they're the 2 major things that I do in terms of trying to remain balanced. Another one could be that reminding myself of, obviously, like I said, the chaos, and the heightened state. So if I feel like I'm slightly heightened, then I try to remind myself and be a bit more self-aware of, okay, you are heightened. You've had this argument or you haven't slept well. Don't open the chart. So trying to remove basically the chance of you making a mistake. So if you open a chart and you're heightened, the likelihood is you're probably going to look at that chart. the more time you look at that chart, the likelihood is you're going to try and find a way to get into a position, and then more than likely you're going to take that position, and then the cycle will begin, you know.
So I guess the real skill to learn is self-awareness, because what you're saying is essentially if you can understand and recognize that you're in one of these heightened states, that's the step. And most of the time when you're in a heightened state, you're not recognizing it. You're just sort of going through the motions. So I think that's really awesome. Now, I know that there's a lot for us to learn from mistakes, but I feel like there's also a lot for us to learn from the things that we've done right. And so what do you feel like are some things that you have been able to improve over time? And what are those changes that you've made that have helped you improve the trading?
So you're completely right. I think too often we focus on like our mistakes and what we do wrong, and like the negative circumstances that we find ourselves in along the journey. And 100%, that's something I've been a bit more mindful of more recently, to be fair, of actually focusing on the good and the positive and, you know, what we have done right as well, to try and replicate as well the sort of positive patterns from the journey too. So like the certain things that have helped me is like the 1 to 5, for example, you know, being able to notice that, okay, look, don't just leave you know, just things to chance and just, you know, any sort of risk to reward, sort of getting very stringent. That was one major thing for me, was actually putting rules in place, systematic rules that you can continuously repeat. So such as like having a fixed risk to reward target, even if it's not something you stick to every single time, as we talked about earlier in terms of using intuition, but on average, majority, if not, you know, let's say 80-90% of your trades fitting that same criteria. And having those strict rules really ended up helping me, because the way I see it is the more you can restrict and sort of have strict rules in place, the more you're putting things into probabilities. Because let's take an example of, okay, me being aware enough to know that, okay, Mondays on average haven't been good days for me, Fridays as well. So therefore, like the middle of the week, Tuesday, Wednesday, Thursday, as a pattern, have been much better for me. Same with the week of the month. So the middle of the month is much more better for me in terms of a pattern I've recognized versus the first week of the month or the last week of the month. So when we get those monthly candle opens and closes. So when I've noticed these things, okay, now I'm starting to make rules. Okay, so now, okay, I don't trade Monday. I don't trade Friday. I only trade Tuesday, Wednesday, Thursday. So now I've got limitations. So now I'm not able to just take every trade. So for one period, I was only trading London session. So therefore, I wasn't able to just trade New York as well. So therefore, I want to be more careful of the quality setups that I'm taking. So when I started to have these rules in place, so including like the number of trades I could take in a week, the number of losses I could take in a week, now, okay, instead of just being able to, especially like with using SMC, for example, being able to just take 5 trades in a day and try and get this huge risk to reward trade. No, now I'm only taking 4 trades maximum a week. Now I'm only allowed to take 2 stop losses maximum in a row in a week. So I'm like, okay, now I want to make sure that I'm taking high quality setups only, because I only have 4. The way I describe it is like being a sniper. So a sniper who only has 4 bullets. So if he only has 4 bullets, he's going to only want to take that shot when he's very sure that it's going to hit target. Not if he's, oh God, maybe it will. You know, it looked like it could. No, but like very sure, right? It doesn't mean that, you know, as a trader, of course, we have to accept that every trade can lose. But at least I will have peace of mind knowing that I did everything possible, the conditions, the entry drill, everything, to make sure that when I take that shot, so when I take that trade, I've done everything in my power to make sure it hits TP. If it doesn't hit TP, no problem. I still have 3 more bullets, right? And that's the mindset I bring.
I see so many similarities between your trading outlook and mine, because I feel like we also came from the same schools of thought. I came from a traditional trading background, and I also used to look at some of the Astro stuff that was on YouTube, and then smart money concepts, and then having to realize a rules-based system is the only way to really get out of the trap, and sort of really starting to build those stringent rules, and then now having the discretion to break the rules. I think that this is awesome. But what I kind of want to go through the different journeys, and I want to see what were the biggest takeaways and what do you still use to this day. So from the Astro era, what were the biggest things that you learned about trading, and then what do you still use to this day from them?
So Astro era wise, it's a tough one, because a lot of people always try and throw shade and say like, oh, you're teaching baby pips or basics and stuff like that. But at the end of the day, it's not like they were trying to promote at the time anyway. Back then, they weren't trying to promote like it was institutional or anything like that. So what I took from there was the basic understanding. I got to learn everything from the basics. What are pairs? What is forex? What does a pip mean? How to set up your trading view. So it's pretty much basics I took from there. obviously at the time I would use, trend lines and Fibonacci's, but there wasn't much focus on putting it together, putting a trading plan together, an entry system together. It was more focused on, here, have 5 or 6 confluences and then take a trade. And there wasn't much focus on risk management. Yeah, they would say, don't risk your whole account, but they would quite openly say, risk 2, 3%, 4%, stuff like that. So, as a beginner, that's not the best thing to know. But like I said, I've always, in a way, grateful to them, because if they weren't available, I don't know if I would have found Forex. I don't know. I definitely wouldn't have learned the basics. And yes, obviously it cost a lot in terms of the course, but again, in terms of what was available at the time, there wasn't really anything. That's why I call them the OGs. Regardless, they were like the first people on social media providing a course in that manner. And that's how I got into the game. So from them, I took the basics. I got my beginning steps into Forex.
There we go. So then when you moved over to Smart Money Concepts, we'll talk about just your introduction to the concepts, and then I want to talk about getting funded 60%. But just in terms of learning smart money, what do you feel like were the biggest takeaways, or what was the biggest eye-opening moment?
So like a focus on structure for sure, because now even though it's something that you do learn at the beginning, I feel like a lot of people, they learn it at the beginning, higher highs, higher lows, bullish markets, bearish markets, but then they kind of forget, and they get lost in all these other things, these other concepts, indicators and other trend lines, whatever it may be, and there's nothing wrong with those things, but then you kind of just forget there's such a basic principle, but yet so powerful. So smart money kind of put that back at the forefront for me, of saying, look, just focus on structure first, like build that foundation from market direction is right there. So that was a huge one. And then risk to reward, I'd say, if I was to keep it nice and simple and short, risk to reward was a big one, because I had never really put a focus on it before. And then now when I realized that, look, if I just put a focus on making sure that I risk a lot less than what I gain. So when we start talking about being able to achieve, 1 to 3 plus, 1 to 5 even, it was incredible, because now I didn't need to have such a high strike rate. I didn't need to put focus on having a high strike rate. And those two things alone were extremely powerful in having a very shift and a very pivotal point in my journey.
Incredible. And I think that the pressure of not having to have a high win rate, I think allows you to trade better, because it allows you to let the trade run. It's like, well, I don't have to be so worried about being right. I know that as long as I allow the system to play out, I'm going to be profitable at the end. So really awesome stuff. Now, talk to me about the lessons, because I think we've all had an experience where you're at the top of the mountain and you start to feel like you have it all figured out, and you end up getting humbled by the markets. What did that experience teach you?
Massive. The biggest lesson I learned was, obviously, as you can imagine, I bet a lot of people out there in the same position, where when you're learning and when you're trying to get that consistency, you put a lot of weight into a big payout, right? You think when you hit that big payout, you've made it. And I'd always thought that for years. Obviously, I'd assumed that when I finally get this big payout, I'm going to feel some sense of I've tied success to this big payout. So I achieved the 60-something%. I achieved essentially after the profit split and the conversion from dollars to pounds, it was about £30,000 in a single month. And wow. Alongside the other income I had at the month, I had about 40K that month. And yeah, that was insane. That's over the monthly salary, the yearly salary, sorry, in the UK. And I was like, when it hits my bank account, oh, this is it, this is it. And it hit my bank account and nothing changed. And I always tell this story, like I still had to wash the dishes. I still had bills to pay. I still had to, do everything else that I normally do in life. And nothing changed. And I think I literally went into a little bit of an anxious period where I felt really off for like a good week or two, maybe. And only through talking to, friends and family was I able to come out of that, because they were the ones who made me realize what it was. It's like, why do I feel so off? I've just achieved the best thing ever. I've just made so much money. Why do I feel so off and like out of it? And then someone literally said to me, it's because you've assigned the success to this moment, and then nothing changes, right? You make money, nothing changes. Yes, you have more money now, of course, but like nothing else changes. The people still treat you the same, of course, and as they should. And life still is life. You still have hardship. You still have lessons. You still have challenges. That doesn't change. If anything, when you make money, those challenges get harder. And you're tested even more. So obviously, for years I had assumed that I would make this money and suddenly my life would be perfect and great, and everything would just go up and up and up. So that was a huge lesson. And then when obviously I lost that account as well, it was just a lesson of like, that's where the 1 to 5 came from, because all I was doing was trying to enter trades and letting them run to wherever, and then just closing profits. So it worked that month. Luckily it worked that month. I was still using risk management. So I wasn't like I was risking 5% or anything to gain the 60%. But it just so happened those, when you have like just like when you do follow an entry drill, right? And you do have a mechanical approach, you have those, I would say, 2 to 3 months in a year maximum where you have amazing months, incredible months, right? And it just so happened that month aligned with me having the funded account and working out. But
I think it's
afterwards,
probably
that's
like
where
20 days a year. If we're going to be honest, it's not even those 3 months. It's like, if you look at the average, I used to be a wealth manager at Bank of America. And so what we used to tell folks is that the reason that you want to just stay in the markets as an investor and not get in and out is because if you miss the top 15 or 20 performing days, your overall profit and loss is going to be half or less. It is that significant. And so for trading, I think it is like that. You're just trading regular, and then Brexit comes out, and then something comes out, and the alignment is there.
Yeah, no, I couldn't agree more. Yeah, it might not be. Even that was being generous, 2, 3 months max. It probably is, like, in terms of trading days, 15, 20 trading days, but it makes complete sense, and as you say, this is why I think a lot of traders, the biggest issue that they have is that they're going through their journey and they're struggling and they're not finding that consistency. But what they do, unfortunately, is they break their momentum, is that they will constantly have like a bad week or a bad month, and then they'll stop and they won't be in the market anymore. They'll stop that momentum. They won't be building that experience, right? We're not being able to build those habits or recognize the patterns in their results. So then they'll take a week off, maybe a month off, maybe 2 months off, and then they'll come back and they'll do the exact same thing. Put in hard work, build some momentum, get into the market, be disciplined for a couple of weeks, let that discipline slip, and then they'll just repeat that cycle over and over again. And it won't change because those gaps, they're not getting that experience. And then the momentum completely dies down. They have to build it back up again. And I found that, every time I'd come back, I'd do the same thing. I'd come back and I would have I'd be disciplined for 2 weeks, slip up. Okay. But then instead of stopping, I'd keep going. Right. And then now suddenly I'll be disciplined for 4 weeks and then slip up. Okay. I'll keep going. Suddenly 4 becomes 6, 6 becomes 8, 8 becomes 12, 12 becomes 24. And then you keep slipping up, but we're human. Right. Yeah. I think a lot of people always used to talk about, you have to be a robot, but we're not robots. Right. It doesn't work that way. Right. We are human. We do experience feelings and have emotions. Our job is to try and manage them, right? To be more balanced and to learn, obviously, from, why is it that we felt, super greedy on this day, after so long of being consistent? What was it about this particular event that caused me to go more heightened? And but to assume that we're never going to make a human error and to assume that we would never feel our emotions whatsoever.
Yeah,
exactly.
For sure. Now, I think I'm a big proponent of building guardrails against yourself, because I always tell folks that are in the Chart Atlas community, which is, it's not about the days where you're motivated and you're locked in that you need to worry about. It's that one day in the next 6 weeks where the gremlin version of you is going to show up and completely mess up your results. So how do you protect yourself? And that's where withdrawal strategies and making sure that you're keeping you're making sure that your leverage is not too available and that you're keeping constraints on yourself for those times. So maybe that's something that folks can take away. But just in terms of the $30,000 withdrawal, because I had a similar moment, do you feel like you pushed the goalpost after that? Because you had been thinking about the goal for so long. By the time you actually got there, you had already set a new goal, or is that not something that you dealt with?
Kind of. Like I said, when I hit that 30,000, it was obviously, I think, like 63 or 64% on the 100K account. The next month, I was like, I'm going to do 70%. So it wasn't like I hit I set another goal in terms of withdrawals potentially, or a proper official goal. It was more so like straight away my ego was like, oh, you just hit 60-something%, and that was easy. You weren't even trying to do that. You just did that. Next month you do 70. And bear in mind, this is my first ever challenge, first verification, first funded account, right? So it's kind of like, because it was so easy, I'd set myself up to fail. It tricked my mind into assuming, oh, this is easy. This is easy money. Like, why didn't you do this before? Because I'd heard of FTMO for a long time, but I just never looked into them. I just thought, I kept hearing people saying funding. I was like, nah, it must be a scam. That's what I was saying. It must be a scam, because why would they ever give like this money, and why would it be so easy to get these these payouts, etc. So in one way I just said to myself, if I've done 60% this month, next month I'll do 70, right? And as I said, the next month I did 2%, and then the next month after that I blew it, which is the classic. Obviously, anyone who gets big payouts, that's how it ends up normally going.
Yep. For me, it was probably 2 months after, completely gone. And then you just have to start over. And then I think that at some point, the pain of starting over outweighs the desire to want to cut corners. Because when you have to keep falling back down the mountain and walking back up every single time, you're like, you know what? That pain is way worse than that greed I feel of wanting to blow the account. And as soon as you get to that point, I think that's where real progress gets made. Now, I do want to ask you one last thing, which is I asked you the biggest lessons from the Astro Effects days, which is kind of the foundation. Then we moved over to smart money concepts, then the getting funded, these different phases. But now you're also getting a chance to talk to so many incredible traders. And I've been in the driver's seat of having a podcast, and I've learned from so many incredible traders. What have you had the privilege of learning over the past however many months that you were doing the podcast?
So much, man. Like you said, like the podcast is such an incredible thing because you just, as you say, you speak to so many people and you start to really see like correlating factors of the journey, which, especially the downside, the hard times, so many correlations with so many traders. But in terms of like the positive things, it's all little things. What I've realized is such little things, but they make such a big impact. So like from, let's say, Raja Banks, for example, and I know that a lot of people have resonated with the same exact lesson, which is like 1 or 2 trades a day. If a lot of traders just implemented that 1 or 2 trades a day, they would see, even if they're not going to win, but they would have, their account would last 10 times longer than what they're probably currently experiencing. And such a simple thing, like 1 or 2 pairs, 1 or 2 trades a day. I love that. A guy called Tans, who has a community called Vertex, he's talked about just trading London session. And again, at the time, that was something that was so beneficial for me because I was like, I kept trying to force New York just because I thought, I'm available and I don't have a job, so I might as well trade it. But I have a family. I was teaching people. I was trying to do the podcast. So whilst I was trying to manage all these things, it was just chaotic. As soon as he said that to me, I realized like, why don't I just trade London? It provides enough. And as soon as I started doing that, because I was scalping at the time as well, I got so much more done in my day. I had so much more clarity, and it's so simple. A lot of the time, it's taking things away. That's what I've realized.
Yep.
That's what I've learned from a lot of traders, that just it's actually taking things away rather than trying to add more, and getting to a point where rather than constantly consuming knowledge and watching YouTube videos or joining different communities or anything like that, it's getting to a point where, okay, I have enough knowledge. I have enough information. I understand the markets. All I need to do now is just make it work for me.
And stop doing the things that aren't working. Like just like what are the things that are hurting my P&L the most? Stop doing those versus adding in a million new things. Brilliant.
Yeah.
100. No, that's a big takeaway I got from Raja a few years ago. 1 pair, 1 session, 1 strategy. And there's no way that you can't master a strategy if it's their only focus for 2 years and it's 1 pair, 1 session, 1 strategy. Very straightforward. And that's actually how I trade now. I trade NASDAQ market opens, New York session between pre-New York and then right during the New York and London overlap. As soon as that's done, I got to walk away. So it's been a big game changer.
And it gives you so much more freedom.
For sure. Now you're going to be at the summit, so maybe we will get a chance to hear you speak. But if you were on stage and you were to leave everybody in the crowd with 1 or 2 pieces of, I wouldn't say advice, but just things that they could take home, what would you leave them with?
Oh, that's hard. That's a hard one because there's a lot of people. There's a lot of people.
Okay, can I ask it a different way? Actually, if I was your kid,
sure,
and I said, "Dad, I want to get into trading," and you were going to leave me a few pieces of key advice and some skills that I should develop over time, what would you tell me?
The best thing for me, the pivotal changes and the things that I could have learned and saved a lot of time and money on was literally first having the money. I think for myself, and I think so many traders, they're always constantly trying to trade from a place of either a net zero or a negative balance, right? And that financial foundation is so important. It's so minor. It's like such a simple thing, but having some form of cash buffer or cash cushion before you start trying to do these challenges or trying to trade, even not full-time, but just trade in general. So making sure that the money that you're risking is actually money that you can afford to lose. Of course, you don't want to lose, but that financial foundation is everything. Because otherwise, you're trying to. Otherwise, there's always going to be an urgency to trade for money, and therefore you're always going to fall into that gambling mindset because you need money. So therefore, when you have money, it doesn't have to be a lot, but some form. I would say at least like 3 months cash cushion, meaning you've got 3 months in the bank of your expenses. Now, when you have an extra, say $500 on top of that, you can afford to go do a challenge. And when you do that challenge, doesn't mean that this is automatically going to happen, but hopefully there'll be a sense of relief knowing that, hey, I don't need to make this money right here because I have some money set aside already. So financial foundation, I would say, again, same with consumption, like especially nowadays, because the slightly unfortunate thing when I started, and probably when you started, is there wasn't as much information available. So you're quite limited in your choices. Now, there's quite kind of the opposite problem where there's too much information available. So advice to a kid, my kid would be like, look, just take your time to look around the marketplace, right? Look around what's available. And then find the people, the personality you resonate with and the style you resonate with. Take your time to observe the free content that they put out and the free information that they speak on, and see, is that valuable enough for you? Is that something you resonate with? Do you enjoy that? Is that something that you can take action on? And then look to potentially join a course. Don't rush. A lot of people rush so fast, but definitely gain education, seek mentorship, seek guidance, because it is worth its weight in gold, the right, obviously, guidance and mentorship. And then once you've learned, step away from all of it. Step away from a mentorship and communities if necessary. I think isolation periods are so powerful. And as we literally just touched on, go and work on what works for you. Take away what doesn't work for you. Focus on what works for you, even if it's not exactly what that mentor does. Perfect. That's how it should be. Maybe that mentor trades Mondays and you don't because it doesn't work for you. No problem. But if I was to say those 3 things, they would be the top 3 things I would say.
That's amazing. I think this whole podcast has been a masterclass on, first, it's self-awareness. Because what I'm starting to realize is with every piece of insight that you've given, there's always an element of, if you understand yourself, you can figure out how to navigate after. And so I think that self-mastery and self-awareness has been the biggest takeaway for me. But I also love the piece about financial security, because again, that's like a very counterintuitive thing that people don't think about, which is, like, I need the money when I'm broke, not when I have the money. And so that's when they're trying to get into trading. But as soon as you have a financial backing, when I got my job at the bank, for example, the financial security that I felt from having a consistent income allowed my trading to go bonkers. And because I invested that money while I had the job, it allowed me to walk away eventually. And so that was a major piece. And then obviously having systems versus being outcome focused. There was also one more, which is having a longer term mindset and being purpose driven in your trading. All in all, incredible lessons, obviously from a veteran. So Riz, I appreciate you stopping by the Expert Trader podcast and sharing so many incredible gems. Can we expect a round 2 from you?
100%. Whenever you want, man. Whenever you want. Hopefully, like I said, we're going to see you at the summit. And I can't wait. I'm very excited to see you there. And part 2, anytime.
I might fly out and see you in New York too. So we'll see.
Yeah, you're more than
welcome. See you in person. All right. Thanks, Riz. All right, everybody, we just saw some incredible traders here at the FIP compound. Make sure that you guys grab your tickets to the FX Summit 2023 conference if you want to meet all these incredible traders, if you want to meet myself and learn from the best. So we'll see you guys, fxsummit2023.com.